Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
The Credifi testnet is live, so head on over to demo.credifi.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and xCredi utilities, and Module X.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past 12:30 here, making it around about 11:32 UTC. A big shout out to everybody that's joining the stream live. So you see loads of people in the chat. Quick shout out, Suleiman K, first in today, so in for the win. Great to see you. Moral, Craig, Joshua Walker, Erica, Nick, good to see you on here as well. Gio, my friend, Simon, Relish Every Moment, hello, and Ricky Garcia. Obviously, a big shout out to you as well. If you're tuning in on different platforms, you may not be able to comment, or if you're watching this on catch up. So I want to make this a nice punchy 30-minute show today, and we're going to focus on Bitcoin. Okay, so I've got the weekly chart up here. What's really, really key of interest to me is how price is kind of engaging with the previous all-time high. So I trade over here with Femex. And that's at 69,000 flat. Okay, so that's an area of real key interest for me. However, yes, we have seen some bearish trades, and we've been taking bearish trades for several weeks now, but based on the premise that we've seen this expansion higher. Now, we've struggled to get back above here, and we're going to explain or kind of dig into why that is. And then we're looking for price to retrace down here. Price loves to come down and fill these inefficiencies, these gaps, and then for price to recover its bullish trend, right? Because ultimately what we're doing here is we've come in, and this right here could very well be, and it is confirmed now on the close of this candle, our higher low. Okay, so if we're talking about this and looking at it from a perspective of market structure, right, we're saying higher highs, higher lows, which is ultimately bullish. Now, we don't, and we never really know exactly where price is going to go from here, but when we look at this and we see the corrective move the price had down, it reacted very, very nicely here from a bullish perspective, right? We had this long downside wick. We cleared out liquidity below this low. And this candle here is known as a pin bar with a short nose, okay? Or you may hear it referred to as a bullish hammer candle. Now, the fact that we then saw a kind of smaller bodied but a bearish engulfing candle the following week, got a lot of people bearish again. Now, I can understand why, and I know that it wasn't the clearest thing to really read, which is why we have a plan to trade both ways. But actually what we saw here is price kind of taking liquidity above this high, right? Coming down, closing, and then obviously last week we saw this wonderful bullish recovery. So now we're in the midst of a beautiful bullish engulfing candle like this, then it's hard not to be bullish. So as we go down to a daily scale, one thing that I do like to highlight, and I think these are so important, are our balanced price ranges, right? So, and our inversions. Now, this was an inversion. That means it's a bearish gap here, a bearish fair value gap that is then closed through with a bullish candle. We then expect this area to offer strong support. Now, when this candle, the bearish fair value gap, is closed through with a bullish one, or vice versa, then this becomes a balanced price range, right? And you will see these on my chart drawn up like this. Now, we can see how this area offered a really, really nice base of support for price. And so often it does. So now we're back into a bullish trend. We can see when we took out this high here is when we had our market structure break, okay? And that's a market structure break because we're coming from a lower low to a higher high, higher low, and now we're very much delivering in a bullish manner. So really, the kind of TA for this for me on these kind of timeframes is quite simple. We have this gap down here. We've got liquidity targets higher. We have the prior swing higher that's currently capping the market. Okay, so as we're looking for price to push back above this, I don't expect this line here to offer resistance necessarily. I'm looking at it as a kind of area that we want to see price establish itself above. So when we look at these kind of areas here, yeah, and especially the bodies, we really want to see price kind of get above these, establish itself up here, yeah, treat that as support, and then really start going into price discovery, okay? Until then, price is obviously being held down below this, but we can see we've recovered this nice bullish structure now. So on a daily basis, I am definitely bullish. Hey, Tammy, great to see you. Crypto Bucket, yeah, Credi. Have absolutely been loving Credi lately, which is brilliant. Trade to Prosper as well. Hello and welcome. So dropping this onto a 4-hour basis and using the same principles, as we zoom in, we can see this level here that's capping the market. But we can also see this, which is really nice. Okay, so we've inverted this fair value gap now, and this is an area that I'm expecting to offer support. So as we look at this, if price is going to show strength here, yeah, like I said to you before, on a daily scale, you know, it would not surprise me, and it would be perfectly healthy for price to come back down into this daily fair value gap here, you know, find the orders and then move higher. Often gives a chance to wipe out any liquidity that's built below here. You know, people maybe in over leveraged positions, flush that out, use that to fill bids lower down, and then price move higher. However, obviously it doesn't have to do that, you know, and we've seen particularly with crypto markets and especially with Bitcoin, how when it starts to run incredibly hot. Prime example here is how we look on expansion moves like this one, for example. We just move this to a premium discount range for price to kind of set this high, then retrace down into the lower 50%, yeah, allowing us to buy at a discount before price moving higher. However, what you can also see up here is in the following expansion leg, which was from this low to this high, this big impulse move higher, how price actually found all of the buyers it needed in this initial fair value gap here. Didn't actually retrace into the lower 50%. So we've got plenty of precedent, including recent precedent, as to why Bitcoin can sometimes just run incredibly hot. Now, using that principle and overlaying it here on the latest expansion, yeah, we can see that price has dipped down into this lower 50%. Yeah, there is a very small gap here that was balanced here but not filled. So with price getting back above this inversion here, or sorry, not back above it, but back above this bearish gap here, closing here, then as of this morning in London, this is feeling fairly bullish to me. So it's very, very difficult to have anything other than a bullish bias at the moment. If we do start to break down and we close below this level here, I will expect price to kind of be seeking liquidity lower. And when we're looking for that, we can see that we've got liquidity resting below the lows here, as well as this. And I really like this one because as we draw that out, we could see how price could come down, take liquidity from both of these areas, right? Find the buyers in here and then ultimately move higher. Now, if we were looking at this and saying to ourselves, where is our line in the sand on a daily scale, then I'd be looking at the same thing, right? I would still be bullish. I would happily intraday trade this down to here if we start to break down. But until we close below this fair value gap here, in which case I would expect price to move into liquidity levels lower down, starting here, around about 60,199. Then as long as we hold this, I am expecting price to move higher. Now, as I said, we don't have to come down and we don't have to rebalance this gap, but I would prefer it if we did, because as we can see here with any other gaps that we have, price does very often rebalance these, and it does so relatively soon. However, we can see with this example, when we had this huge expansion higher, how it took price all of this time till here. You know, this one happened, the close of this kind of leg up really happened in March, and then we didn't kind of rebalance this lower FVG here, right, all the way through until April. So this doesn't have to be balanced now. We could see a lot of price come up, and this could actually be done on the way down or certainly at a later point. So very, very simply, on a weekly scale, on a daily scale, on a 4-hour scale, we are bullish. However, the counter to that is that if we do see price start to break down, and that for me would look like price coming back down below this inversion fair value gap here, then I think price could be correcting down into here, but I would still expect it to be catching a lot of bids when it gets down there. Hey, Tammy, great to see you. Yeah, it would be good to rebalance that fair value gap on the 4-hour. So, you know, if you're coming in, we kind of come in here, just rebalance this one here. What we want to do is purge a little bit deeply down here into the daily. You know, we would take out this intermediate term low here as well, which we know lows and highs that are within fair value gaps offer really good liquidity pools. So the idea and the premise of this is for, you know, your major players, your institutional involvement, to get the fills that they need for the size that they can want to invest with. They often want to catch the market offside first, and then reverse quite quickly. So that is what we would be looking at there. So let's pop ourselves over to Ethereum. And let's see what we've got here. So following on from our previous analysis, we can see how we've been looking for this inversion fair value gap here as well, right? And look, once we close above this here, I know this is on the 4 hour, I will move to the higher time frame. But as we close above it here, look how this area that's offered resistance, resistance, resistance. See how when price carves through this, it comes back down and finds this area of support. And we even got within here a secondary inverted fair value gap. You see these on my chart in purple, right? And then again, a strong close above that, and look how price has then taken off since. So the other things that we highlighted were the liquidity above these highs. So we see this as low resistance liquidity, and a really, really good target for price to come up. So what we're looking at here at the moment, if I just zoom in a little bit, is how this bullish fair value gap here is supporting price. So once again, look, we've set this long upside wick here. We cleared out liquidity here. We've now had a corrective move lower, a little bit of a reset. We're now starting a little bit more bullish momentum here. So the first things that we're going to be looking at here, obviously we need the close of this candle first to confirm this as a swing high. And that close is going to come up in about 16 minutes. And then we have the swing high, which will be on a higher time frame, slightly above it. So the expectation now is price to continue its bullish price action while it's in that state of delivery. I'm just going to get rid of those for a moment, and we're going to zoom out to our daily here. And what we can see here is that price, as as we've seen with Ethereum, has been lagging a little bit behind Bitcoin, all right? But what I really like about this is we had this low here on a daily basis, which we've swept. We couldn't close below this. If I just zoom in again, we just could not close below. Look at the absorption happening as the wicks, as the bodies come back and close above. We get this beautiful engulfing candle here. And then ultimately we change our state of delivery with this candle. We had a small change of state of delivery here, but we have this larger body candle here, which has now confirmed itself as a bullish order block, right? So take that, draw that across to here, and you can see the significance that this has, right? Just make that a little bit further across. Here, price comes down, we get the strong close above. Look, rejection, rejection, beautiful close above. So now this area here is what I'll be looking for to hold, all right? And really want to see some long positions emerge from there. Like I said, looking at this more granularly as we have been on the 4 hour, draw this gap back in again. Right. We need to remember we always kind of give way to the higher time frame, right? The higher time frame is key. So with this level being the order block, it doesn't mean that we can't see price dip into this. We would expect the equilibrium of it to hold, okay? But price could very well do something like this. And very similar to what we're looking at with Bitcoin, could have a purge a bit lower before finding a recovery. Now, that would sit nicely with price coming back down to rebalance this bullish FVG down here. And again, if we're looking at this in terms of our range, then this sits really nicely down in the lower 50%, giving us a really, really healthy option to catch some bids here because we're down in discount, okay? So again, I wouldn't just be blindly longing these. I would be focusing in on this area here. I'd be looking at, say, something from a 5-minute, a 15-minute to a 5-minute chart. I'd want to see a level swept, something like this. You want to see a strong recovery with nice momentum and then a pullback to this area for continuation. Now, within this, you can look at this in a couple of different ways. What you want to see is inducement, meaning that you've seen a low swept, which we would get here, all right? And then you would want to see the high, which is this, right, that swept the low, closed above. And then within here, you can either look to extend that line across and get some entries in here. All right, so that's where you would be targeting your longs, or you would be looking for some kind of inefficiency, some kind of fair value gap in here for price to react to and move long. That's certainly what I would be looking for anyway. I like to see confirmation, so I'd be zooming in on the lower time frames here if we get that move lower. Now, What would make me think that we were getting that move lower is if we close below this fair value gap here. Now, we are coming into the top of this order block on a higher time frame. However, we need to remember that, price can very, very easily dive deeper into this. Right, we were looking at this as an area. Yeah, so if I was to take this as an order block, which I do in blue, so if you ever see them on my charts. Now, if we look to the equilibrium of this, okay, which is just the 50%, we could see then when we go back to a 4-hour, how price could very, very easily kind of come and dip back down, respect this bullish fair value gap here while staying above the equilibrium. And even on a daily scale, we don't mind if we wick into that. We just don't want to see closes below it. Then we find that momentum to move higher. So at the moment, and just to kind of show you guys the thinking here as well, if we're looking at equity markets, we can see with our S&P 500, equity markets are still super bullish. We've taken out the all-time high. Price is now starting to establish itself above that, which is a sign of great strength, and is also making a move on its new high, which was set last week. Okay, so let me just adjust that so that we see that that's actually previous all-time high, and this up here is now our all-time high. So while equity markets are strong, that's normally a very good sign for Bitcoin. Bitcoin being a risk asset, aligning itself with risk markets like the S&P 500. Also, you have the NASDAQ, which is incredibly closely correlated because you have such large bags of technology stocks. So with that in mind, I know this is very kind of crypto focused with this. Just looking very quickly for anybody that is interested. So this is our NQ current contract. Okay, so this is futures. We can see we did the same thing here. We took out the previous all-time high. All right, that's currently capping the market. As we move down to a lower time frame, you have to forgive some of the annotations on the chart. I know I don't normally kind of cover these with you guys. So there's still some setups that we cover with our trading crew at the Bird Nest. But we're looking for this fair value gap here, right? Again, looking at the expansion leg higher, taking our 50%, we saw this nice retrace down into this gap. The gap was respected. Beautiful pin bar candle here with a short nose. So now expecting bullish continuation. This is currently capping the market here, right? That level is at 18,686.75. We want to see a strong close above this and then price ultimately make a move on the all-time high, which is back up here around 18,761.75. So I did see somebody earlier, I think Crypto Bucket, who was talking about Credi. So let's take a look at that. So let's start this up now on our daily chart. So we can see price has had this nice reaction down here from the order block. We did, one of the things when we covered Credi last time that was quite interesting is we did violate this fair value gap here. When that happens, we very often see continuation lower. All right, so we closed below it here. So there was an expectation from me certainly we're going to come and take out this low. However, Credi showed an immense amount of strength here, didn't come down nor need to take liquidity, local or otherwise, has now closed back above this, right? That for me leaves this as a very, very strong area of support. Okay, we've seen this. We expected this to hold bullish. It didn't. Price came under here, violated it, didn't take any liquidity, and then has now popped above. So showing us a little bit of buying pressure there, which is good news for the bulls. So dropping this down now onto a 4-hour, we can see this is quite nice. We had this nice expansion up here. We left this fair value gap. Price did come down and rebalance this into here. All right. Now we can see what's happened is price has come and taken this high, which was set over the weekend. It also left relative equal highs here as well, which are often key liquidity targets. Now, what's interesting here is we formed another bullish gap. Okay. And once again, this has been violated. So Credi, not a massive respecter of these inversions at the moment. However, what we can see is price came up, took this high, has now come back down below, kind of invalidated this really for me as a point of interest here. And what I would be looking at is if price is to continue its downward momentum, and that is indeed valid within that inversion, then I would be looking for price to move a little bit lower. And once more, we can see how there's some alignment here with Bitcoin, right? And with risk markets, we can see how there could be these corrections lower, except, you know, we don't want to ever kind of enforce our will on the market. What we want to do is we want to trade what the price action gives us. So while we've got key liquidity targets to the downside, and again, I don't typically trade these things until we have the start of the New York session, the New York equity markets. That's when you get the biggest injections of volatility. All right, so and volume, and that's when we can obviously try and catch those larger moves. In fact, as we move to the lower time frames, let me turn these back on. Okay, just to give you some examples, look, here's the New York AM session, right? Look what happened, that big move, all catalyzed here in the New York AM session, right? PM session here, this is where we got the corrective move lower, ultimately to come up and take the previous high. So now what we would be looking for here is saying, okay, well, if price is indeed going to be bullish, then maybe price kind of meanders down here. We've got this nice higher time frame low. We'd want to see a nice strong recovery above that in our New York session, and then we could look to trade it higher. What I'd like to see is very similar to what we often see up here. You want to see that breakdown. So as we came in here, price took momentum, right? And then what you want to see is when price breaks down and takes a low, as it did here, you want to see price moving through that. You want to see strong body down close candles, in this case, because we're moving lower. Then what you can do is you can say, okay, once we've kind of violated and closed below that, you can look back up in the prior price leg. Yeah, again, you can use your 50% if you like to. So you would be taking it from this low here back to this higher. Okay, and then within here, you're looking for either that order block, that fair value gap, or something where price has given us a reason to short from. And in this case, we had this, right? So as we're drawing this back here, so when we're moving up, we're looking for the down close candles to be respected. When we're moving down, we're looking for the up close candles to be respected. Okay, we've got this bearish order block, which was confirmed with the close of this candle. We can see once, twice, and 3 times here, price has driven into it, found rejection, and ultimately broken down. Now, where price currently sits, bearing in mind we're on a 15-minute here, guys, so it's an execution style time frame, we can see that price has just violated this. Now, again, the more illiquid an asset is, then the more that you can see these levels not be the cleanest respected. But as long as we hold under here, there's an expectation that we're moving for liquidity lower down in terms of this high term low. If we close and get back above this, then I would expect price to start making moves on these untapped highs, which we can see here, and here, are offering quite a tasty looking liquidity pool. All right. Or low resistance liquidity for any kind of ICT traders out there. And we often see these sweeps of lows and price kind of make an attack on those highs. So that's where I'm feeling at the moment. It's not to kind of dive too deep into the alt markets at the moment. I typically am very quiet in the markets on a Monday anyway. I like to get my analysis in. Then I like to kind of take a look and kind of say, okay, well, what's high probability? Are we aligned with time? Are we aligned with price? And ultimately, are we aligned with our high time frame order flow? Meaning that if we've got liquidity targets above, we want to see these bullish gaps and lows respected, and then move to take liquidity higher up. See, we've just got a couple of questions in here, guys. Let me just take a quick look at those. Thank you, Seb. Craig, BC, do you ever look for moves to start the UK session and continue in US? The move last week did exactly that. Yeah, sure. So let's just take a very quick look at that. And actually, let me go down to 15 minutes so you guys can see it. I'm going to pop the session breaks back on. All right. So typically what you're talking about, and if you're talking about kind of especially, for any ICT traders, and that you're looking at weekly profiles here. Yeah. So on a daily scale, typically what I'm looking for is if Asia has consolidated, yeah, and if that consolidation goes into London, let me put on Josh Yu's excellent indicator as well. You guys can get this for free as well. Where is it? Here we go. What I love about Josh's indicator here is it gives you a really good view on the Asia session, right? So Asia, when we see consolidation like this, just continue that on in red. What you can see is in London here, we sweep this low. That generates the liquidity needed for then the move higher in London. We then pull back just before the New York session and get continuation into New York as well. All right. Now, the opposite is quite often true when you see large moves, okay? And you can see these in here as well, right? You can use the red boxes to monitor how big those moves are. If you get a large move in Asia like this one, right? And then you can just measure points high to low. All right. Typically, you're looking for anything over about 50. So you've got plenty there. You've got a couple of 100-point move. What we're looking for here is as prices kind of drop back down, look then what happens to the New York sessions, right? We've had that big move in Asia. We got the continuation in London. And then let's look at the start of the New York session all the way through to the close of that. Notice how we really didn't have much. So that's something I definitely pay attention to. As with anything, I'd always recommend going to the source. And if you want to do that, I would look up ICT's weekly profiles. It's very, very interesting how we're kind of hunting liquidity at different stages. But typically one of the things I'm looking for, and again, you can kind of see it here, pretty large move here in Asia. London tries a little bit of a recovery here and we kind of sweep that. Yeah. The important thing here is that as we've come in, we've taken out Asia's high here, right? So Asia's range was really big here, right? But look how as we come up just before the New York session, we take liquidity above that high and then correct lower. Ultimately, when we were looking at that before in the larger moves, yeah, just give you, if we've got a more local example, I don't think we have. But in the kind of larger moves, when price comes down, you see these big drops here and then price consolidates. Yeah, you can see how price ran out the lows here, had a little bit of a correction, but ultimately found resistance at the bottom of the range here and price was kind of held underneath. All right. That's certainly a way that I would look at it. But in terms of reading weekly profiles, I would definitely always look at, ICT and go directly to the core content. But how we're kind of looking at this here, and the reason I say that is because, first of all, to always pay respect to our previous mentors. Obviously ICT and obviously Trader SE was probably one of the biggest influences in my trading career, all the way back from, doing FX and stuff, right? But I would say just, learn from these people, learn from the good ones, but then you interpret it in a certain way. So the reason that I say that as well is that I will certainly use these profiles differently to how some other traders will do who have learned the same material. So I think it's always solid advice. But as with anything, I think momentum tells us a lot of the keys. All right. So looking at how price is moving and then identifying our key liquidity targets on higher time frames. Okay. And Seb, does there tend to be a fake move on New York Open before the real move? Yeah, absolutely. Again, this is a really, really good one for anybody that's considered using this. And again, don't just jump straight in and start trying to trade these things. All right. Go and back test it, get some data behind you. But look at this, right? So New York shown by this thin red dotted line. Hopefully you guys can see that. Now, typically what we're looking to do is we're looking to be long, or we're looking to be buyers below it and sellers above it. So you want to wait for price to come in, give you some indication, see how we sweep this low here, deviation, climb back above. Yeah, price comes in, gets back below the New York Open here, beautiful inversion gap here, gives us the opportunity to look for long setups, all right? Yeah, sure. ICT weekly time as well. And they'll break it down in terms of, because there's certain ways that you would look at it. For example, if, looking at Tuesday or Wednesday to set high of the week, how you would look at just the different profiles of how the weeks and how you can, look at data to predict continuation models. It's really, really interesting. So you can see that here, right? Just to give you a few more examples. Look, New York Open, this is the red line here. What did we say? We favor shorts above it, longs below it. What do? We want to see a liquidity target taken. We get a deviation. Price comes back below. All right. Very small inversion here. Yeah. And then ultimately, this is where we're looking to be short sellers. Just to show you a few more examples. So I do find it really interesting. Once again, New York Open here. Look how you long bias below it. All right. And then even when you move into the PM session, you're short bias above it. So it gives you a nice opportunity to short. Once again, looking for longs below this, right? We see we never really got triggered here. Price ultimately started at the beginning of a reversal just before the New York PM session. Another good example as we move through to here. All right. I'm not sure why this one isn't on here actually, but we would have our, oh no, it is here. Sorry, opening price here. You see that little dip below and then price really skyrockets. Ultimately, we then get the reversal here above the New York Open. And another good example here is how price goes down. Now, these aren't things that you would use on their own. Again, you always want to put them in with a bit of confluence, right? So, for example, when you start taking out high time frame levels, just spin to a random part on the chart. All right, so down here, for example, we've had this huge downtrend. Now, whenever you get these, you start collecting these untapped highs, yeah, or untapped lows in the other direction. You can see liquidity, 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 liquidity. So what you want to see is you want to see price drive down into a high time frame level or a higher time frame low, which we would have here, for example. This is also, sat within a fair value gap, which is over here, making it a great liquidity pool. And what we can see is we had this nice reaction here. Once again, I know I sound like a broken record sometimes, but we have this beautiful fair value gap inversion down here. Again, look, holding, what do? We see price come in here. We see the inversion. We see that we're below the New York opening price here. Then all we're doing is we're looking in here. What did we say? We want to see inducement, right? So we want to see a low swept. There's the low that's swept. You can then move down onto a lower time frame like this one, for example. And then once again, you're looking for that sweep, and then you're looking for that energetic move higher. You can use you can employ a lot of different entry methods here, right? You know, you can enter on the close above here. You can look for a retrace into here. Ultimately, the key thing is in here that you're on the lower time frames, right? So you can see where the liquidity is built. Now it's just a case of trying to position yourself and find the entry. And then once again, you know, when you zoom out to a higher time frame and you remove the noise, you say to yourself, well, how do I know where to target? Well, you can just be super conservative, right? You could take this price leg, this dealing range, for example, which has taken liquidity from a high here and liquidity from the lows here. And then you can draw your dealing range in here and you can say, okay, well, where could I possibly target here? And you can just place your targets and find somewhere that's up towards this, the top 50%, where we would then be looking to short. And then you see that this fair value gap here overlays that quite nicely. All right. So you can then look to that and you say, okay, if we close above this, we show some strength. If not, we're rejecting here. And what do we get? Some really nice short setups as well. All right, guys. So let me just clean that all up for a moment. Awesome. Right, guys. Well, look, we're going to actually close that off today, unless anyone has any specific questions. Wanted to make that a little bit punchier today so we can kind of look at some markets. I think ultimately, you know, when we're looking at Bitcoin as kind of being the one that's leading the market, as we've said, we've got this nice close above here now. So from, you know, 9 o'clock this morning, then that was the thing, looking for long setups from 9 o'clock. So how does that look? Very simply, and you know, broken record time coming up again for you guys here, but we get this beautiful fair value gap inversion here, right? Meaning that when we get that nice impulse move, we're then looking for any inefficiencies in this move high. Do we have any fair value gaps? We don't. So what do we have? We have this nice bullish order block here that we draw across. And this is where we can look to go long, right? Just an example, not suggesting you guys do the same, but that's what I'd be looking at as an example. And then I'd be looking to trade that, first of all, to the intraday liquidity, which is resting here. That intraday liquidity has now been taken. So as we move into the New York session, that's our next target, followed by this one up here at 67,613. All right, guys, wishing you all a fantastic weekend. Please do be aware of news as well. Okay, just putting it on there. So we have got today, we've got nothing, but tomorrow we've got some news coming out of Canada. So that's fine unless you're trading Canadian pairs. We've got Governor Bailey, the tool that's in charge of the Bank of England. He's going to be speaking tomorrow. Some gibberish, no doubt, but let's be careful. We've got FOMC meeting minutes on Wednesday. Okay, so that's at 7 o'clock on Wednesday, which is actually my birthday, which means that that's probably the second or third year in a row now we've had FOMC minutes falling on my birthday. So always a nice bit of volatility, guys, but I'm going to be here with you on Wednesday as well. So we'll celebrate that one together. And we're going to be looking for our alt request Wednesday. And some of the crew over at the Bird Nest as well have got some really, really cool stuff coming up where we're going to be looking at the AI narrative and other narratives that are driving the market, focusing in on the setups and the charts that we want to be looking at and the assets that we want to be looking at to trade. All right. So got a really good show coming on Wednesday. So do hope to catch you all there, which is going to be at midday, which is 1100 UTC. All right, guys. So until then, wishing you all a fantastic week ahead. Do pop down. We've got links in the description how you can join us for free, how you can join the paid membership groups. You can come and trial it for a week for nothing. You can find, please do come and join us over at Femex. You can find the sign up in the description. They are doing something amazing over there at the moment. You get a community, you get the Bird Nest. We have our own channel on there on Pulse. You get free updates. There's trading routines. There's daily exclusive content going on there. And you get rewarded in their native token just for participating, just for liking posts, sharing posts, engaging in it. And that all converts into PT, which gives you USDT as well. All right, guys. So please do take a look. It's down in the description. And I look forward to catching you all on Wednesday.